Hi, I'm Christine Poplau, and I'm Senior Manager in the Advisory Services Department. Today, we're going to start a series called Month End What to Do. Hopefully, this will help you on understanding what we think is necessary to get a successful month end and ultimately successful financial statements. Let's get started. The first thing I want to talk about is actually what's the difference between financial statements, between month end, and between closing a month. The month end is what we call actually the last day of the month, which is what you would think, month end. And on that day, we suggest that you run a number of reports, and those reports can be found in the general ledger under print all reports. There's a listing. There's also a process of preparing financial statements. Then we'll get into that in a later seminar. But those reports are found here under income statement and balance sheet. And then finally, there is month-end close, which is where you actually hard close the system, which it's in the general ledger month-end processing. And what you do here is you close the month so that no one can go back and make any adjustments to it. This is usually done after month end, after financial statements, and maybe even a month or two after those financial statements are issued, in case you do need to go back and make any differences. As you may know or may not know, the system only allows you to have 12 open months. So it's really important that you keep track in your general ledger as to what month you're in. And as you can see here, we are currently in month 12, which would be December. That means that December is still open, even though it is now currently March. So we would have to close this month by November of 2024. There are also some daily tasks that we suggest that you do. Those daily tasks include running certain reports, and those reports may or may not be necessary to update the general ledger. So let's go look at what those reports are. And we're going back to the print all reports. This is just one page that allows you to select the report to be printed so you're not jumping back and forth between different modules. So the invoice register, accounts receivable, these two accounts receivable reports, your accounts payable, and your general ledger. We suggest that you run these daily. It keeps your system up to date. It also allows you to see what your employees are doing or what has happened. So the invoice register is basically a sales journal. It's going to show you what jobs were invoiced. This is necessary to update the general ledger. Accounts receivable open item adjustment register. This report is going to show you what you have manually entered to an individual AR account. If you're needing to do a bad debt write-off, is an example. The payment distribution report is going to show you how all payments that were received were applied to the individual customers' accounts. The thing that I like about this report is that if there is a small balance left on that account, let's say that the bill was $101, they only paid $100, you're probably not going to try to collect that last dollar. Shows you that it's still there. You can go in and modify the payment and apply a discount so that that balance is now zero. The accounts payable open items adjustment register is very similar to the AR. This report is going to show you what was entered into accounts payable. You can enter that with or without the GL detail. There is a box there that you can select. The final daily report we suggest is the general ledger. This is also a collection report. It's necessary to update the general ledger to keep all of the account balances updated. So this should be printed daily. and the invoice register for collection purposes. The others are just to monitor what's going on. We are working on getting the invoice register and the general ledger update to print automatically and then email you at the end of the day, actually probably at early morning. That's going to be a great help so that you're not having to worry about those. There are other daily tasks that are necessary, but at this point, we're just going to focus on those accounting related tasks that are necessary to keep that general ledger up to date. Before month end, we're talking actually every day of the month. There are certain things that you should be doing, things that I suggest you at least look at weekly. The first thing would be to keep up with accounts payable. With accounts payable, inventory is probably your largest item that you'll be entering. And there's a report that's going to show you what you have entered, or I'm sorry, it's going to show you what you've received versus what you've actually entered into accounts payable. And that report is found in purchase orders. It's found under print reports, receiving reports. And then as you pull down, there's this report called Receiving Report by Product Time, AP, not invoiced. That means that it's not been entered into AP. So you would select this report and you can use a certain number of dates. But if you're keeping up to this, you could just be running it monthly. You select those dates and it's going to give you a list of inventory that you've received that you have not entered yet. And I'll show you that report a little later. The other thing that I suggest is done daily or at least weekly is to keep up with invoicing. You can review a WIP report, which is found in either owner functions, and it's going to be called billed versus unbilled from job cost. That's the owner version. The other is actually in job cost. It's going to give you a list of open jobs and what the percentage of completion is. That's a good way to see what jobs should have been invoiced that haven't been. It's a good way just to look at all your jobs in general to see what your status is. Now, finally, it is the month end. Today's the last day of the month, and we're going to run reports to show us that our general ledger is in sync with our subledgers. Now, our subledgers are inventory, accounts receivable, accounts payable. Those are our subledgers, and those areas or those modules in the general ledger should always tie to that subledger balance. So let's go ahead and look at those month-end reports that we would run again in the general ledger, print all reports. And here's that list of reports. So it's, the end of business on the last day of the month. You've run your daily reports to update. Next, you're going to run a trial balance and an annual trial balance. I tend to just work with my annual trial balance. Some people like to work with a trial balance, but I still suggest that you run an annual trial balance so that you can see all of the activity that's been going on in each account. Then we're going to run an account detail report. What I like about this report is it's going to give us the last sequence number in the GL detail that's been run. And that report I typically run and I print to Excel, and I'm going to say it's 2024, obviously, and I'm just running for period 3. And here's what that report's going to look like. It's going to show you every transaction that has hit each account. This is what we refer to as a sequence number. Each transaction is going to have a specific sequence number. And it's going to help you if you're trying to find what the other side of an entry was. Knowing what the sequence number of a specific transaction is really necessary. So this report is good to have with your other month-end reports. Going back to the reports that we would need to run, we would run an inventory audit. This report is going to show us any manual changes that have been made to our inventory. These would be things that would come up from a cycle count, or let's say you found a piece of material that you didn't have an inventory, you could manually enter it that way. You could also, if you're just doing roll balances as you're cutting carpet, you might make an adjustment that way. So when we run this report, we're going to want to run this report from the beginning of the month until the end of the month. And when we run, we only want consumption errors, and we want to exclude the credit and credit memo adjustments. And I will show you what that report looks like in just a moment. The next is to do an inventory purge. Some people do these more often than once a month. I would say once a month would be the minimum amount of time that you would want to spend. But what this purge does is it takes whatever product code you select, and you could select all, and it archives that information so that when you're looking to assign material, you don't have a lot of lines for zero balance. Always make sure you're purging with a vendor invoice. And when I do my purge for month end, I usually leave about a week in there. You can always move it back from history, but that's just how I like to do it. And then when you hit continue, it will print a report. You could print this to PDF, or you could just print to screen. It doesn't matter, because you can always go back and reprint those previous reports. The next report is going to be an inventory valuation. When you run this report, it's going to not give you any options for days. So we are printing this inventory evaluation report as it is now, as it is right this minute. So it's important to note that I like to do this report and look at inventory at this time frame, because nothing has been changed. No one has done any backdating of inventory, or sorry, no one's done any backdating of invoices. You know exactly what you haven't entered into AP. You know the exact amount of audit adjustments. So we run this report, and then we run that receiving report, APRNI. That would take care of all of the reports that you need to adjust your inventory. So the next report is an installer listing report. This is really only necessary if you have a retention on your installers. If you don't have a retention, you don't really need to worry about this. It's a good idea just to run the report, though, and to look at some other details about the installers. And I'll get to that in just a moment. The accounts receivable reports are the agings. So when we run an aging report, you can see that there's a lot of options here. A standard, you can run it by salesperson, you can just run it with retainage, or you can do an as of. For month end, I really do suggest that you run the standard with the detail and the as of with the detail, and ensure that those two agree. When I'm doing this, I don't worry about anything down here. These are other options you can use when you're running reports that you may be using for collection purposes. So again, I run a standard using the end of the month, and an as of using the end of the month with the detail. And that takes care of these next two. The next set of accounts receivable reports are customer deposit aging reports. So if you have customers that pay deposits that you post to individual work orders or jobs, they're going to show up on this report. And it looks very similar to the aging report. It doesn't have as many options, but again, I would run detail, and I would run standard just like this. And then I would also run as of. That takes care of these two reports. And then in accounts receivable, there are a couple other items that we suggest doing. A closed deposit purge. This allows you to just clean up your deposit listing. It's not going to list any 0 items. You can limit the purge. So you would say, I only want purge items that are older than this date. Or you can just say, nope, I want to purge everything and continue. The next thing is the end of month processing. And some of you may think, well, I don't want to do an end of month processing because I still have invoices that I may backdate. This process really just kind of cleans up the AR. It moves items that are paid out of the listing when you look at the customer status inquiry. So go ahead and run this on the last day of the month. The numbers aren't really used to update anything, except for one report that is very rarely used. But when you do the end of the month processing, it's going to ask you what month you want to close. And then if it's the end of the year, so obviously you don't want to do that. But the purge 0 balance items is what I'm really referencing here. And this is something you really only want to do on the last day of the month. You don't want to try to run this in the middle of the month. And I will only purge through that previous month end. So I don't want to purge anything from March because I haven't done my bank rec yet. So I'm going to go ahead and run this report. It just runs in the background. It doesn't do anything. It's actually not a report. Sorry, it's a process. But what this also does is it updates the month sales when you're looking in accounts receivable and customer maintenance. So if you are in this screen and you want to look at your customer sales for the month, now this probably won't have any because it is my test system, but you can do account info and it's going to tell you month-to-date sales and year-to-date sales. So this is just more kind of informational. It doesn't really matter to any financial statements. This is just if you want to see what this customer has purchased in the last month or in the last year. So let's go back to that general ledger report. Print all reports. So we took care of everything through AR. The next set of reports are going to be accounts payable. Now, I don't run an AP aging. All that information is here in this report. And very rarely do I care about the aging of my AP, but I could still get that if I used this report and did a pivot table. But what I want to do is run a standard and an as of. Now, this standard is always going to run through the last day of this month. The as of is going to run through the day that you select. So obviously I would run standard, and then for as of, I would select 3/31 to get that information. And again, I will be going through these reports in just a moment. So here are these 2 reports. For accounts payable, we also have an end of month processing that we would want to run. And it is just merely running and it's updating the reports. Excuse me, it's just updating on the vendor history. So we ran the end of the month processing for accounts payable. Again, the next report would be the work in process that we've already discussed a little bit. So we've run all the reports, we've printed them to Excel, and this is basically what we end up with. We end up with a listing of the trial balance, and I'll go through each of the reports and what I did with the data here. So here I have the general ledger detail that I printed. Here's my inventory valuation report. It has a listing of each item that we have in inventory, what we have on hand, what might be reserved on a job, what's available, what's been work ordered on the job, and then what our true on hand is, so that we know what we can actually sell, our cost, what the freight breakdown is for that, and then the item cost. It also ages our inventory, tells us the date received, and some other information. But what we're mostly concerned with is what the item cost is. So that's the column that we're going to be worrying about here. The next report that we ran was the inventory audit report. This shows two changes to these two pieces of material, 4-piece color coordinations and some shoe molding. And it looks like we changed the quantity on hand, which is over in this column, from 104 to 100, and here from 72.92 to 7,100. That caused this change in the dollar amounts. If I want to know who made those changes, I can go back here and it tells me the user, which it was myself. And then over here, there's also an explanation for the adjustment. I will say that we never ever want to just make this adjustment for this change without looking at the data here. There may be items that don't impact the general ledger balance. These obviously do because we changed the count and there's a dollar amount there. So I strongly suggest that you review this before you make any adjustments. The next report is this APR&I report. It's going to list what items we've received that we didn't post our AP bill yet. And we can see here that we've got 2 from Shaw and 1 from a WHE. Not sure who that vendor is, but going over it tells us the date that we've received it and what the total is. Now, if I'm sitting at March 31st and I have receiving from February, I'm going to be a little concerned that those haven't been entered yet. As we know, we can get invoices now prior to even actually receiving the inventory. So it's important that somebody's reviewing this report. Like I said, I think it should be done at least weekly to make sure that we're getting those invoices in and getting the costing adjusted appropriately. When we receive inventory, it's going to come in at this cost, which is the cost that was on the purchase order. If we don't adjust it to what the invoice cost was, then our job cost is going to be incorrect, and thus the commissions that we pay would be incorrect. So after we've run these reports for our inventory, the valuation, the audit, and the APR&I, I come over and I will look at my inventory for here. This customer also has freight. When I was doing this just for our purposes here, I did not include that amount, but it should be included here. So for my general ledger, I have a balance of 182,000. I had an audit adjustment of 114. I had APR&I of 8,500. So if I add those, that is my adjusted general ledger balance. Remember, these don't hit the general ledger, but they're necessary because they are included in this valuation. So I have a subtotal, my adjusted GL balance compared to my valuation, and I have a slight difference. That difference is, let's look at what percent that is. That is 0.66%. That's certainly within the realms of good materiality and that it's an acceptable percentage difference. So I'm going to make an adjustment to my inventory to tie to my valuation. In this case, I'm increasing it by the sum of these two amounts, which is this 115896. So I would go ahead and make this adjustment now. This adjustment I'm not going to make unless by the time I'm working on my financials that APR&I has not been cleared. So let's continue on the reports that we've printed. Here's my AR aging standard. I've put this column in, which is the total. I do the summation of current to credits to come up with my total. I do the exact same thing here for my as of report. And then I go to the trial balance and I compare those numbers to what's on the trial balance compared to my subledger standard, my subledger as of, and those differences equal 0, which means that everything is in balance. I do the same thing with my accounts payable. So here are my AP reports. Now this report is going to print with positive numbers, even though accounts payable is a liability and thus has credit balances. So when I take those numbers over, I just use a minus sign, as you can see up here, to get that number, and those tie as well. Then I'm going to look at my customer deposit standard and as of, and compare those numbers, and they agree as well. And then finally, I'm going to look at my installer clearing account, or I'm sorry, my installer retainage account. That's on the wrong column. That's on the wrong one. So let's go ahead and move that there. And I actually have a difference. So I would want to investigate what my difference is. Did I post something directly to my general ledger? So I would go into the general ledger and go into account detail inquiry and look at the activity to see if I had posted something directly there that caused that difference. So overall, that's all you have to do on a monthly basis. It normally takes about 15 minutes to go through and print these reports and do this little summation worksheet. It's really helpful because now you know, oops, I must have done something wrong with my installer retainage. I need to go in and look and see why it doesn't tie, or what happened in accounts payable or accounts receivable. Did I accidentally make a journal entry there? What happened to cause that to go out of balance? So those are the important items that we suggest that you do. I like to call this kind of my mini audit. I'm looking at what my subledgers say compared to my general ledger. I'm just making sure that everything agrees. I want to thank you for attending and look forward to you attending the next seminar on month end, which will be in the next quarter. Thank you.